Well, at least for the moment, the market has flipped this morning. Although, you're never going to be able to outguess on a day like today how we end up. The fickle might be the word of the day. Bitcoin dropped as low as 95,000. Tesla is still in the threes. But now, after bonds sold off, yields are up again after being way down to for 4.07 back up to 411 and more. I'm going to try to make sense of it and prepare yourself for a wild ride this morning as the content might thrill you or might increase your concerns. But let's start with this. Yesterday I said, and I think I was the only one saying it, I don't know. But I said, what's going on here that Elon has not, or Tesla has not reduced prices, put together any deals? If sales are so horrible, why aren't we seeing a bunch of deals out there? Well, I put that up on X as well. And this morning, I got this. This is from X Christine, I guess it is, with an X at the beginning instead of CH. So X Christine. And she goes by Neon25083 at Neon25083. She says, replying to me. She says Brian's next big future and both the other Brian, Futuraza, might have some insights here. I spoke to Tesla employees in Norway and they're complaining they cannot get enough cars. Seems new. So we saw Norway. Oh, the drop. Oh my gosh, it's fallen off a cliff. And I'm like, no, it makes no sense. Seems to me more than the usual number of cars on ships this quarter. Germany, TMY to Canada, Chinese, TMY to Europe, and both new. Canada adds tariffs, so Tesla sends German cars. Not enough cars in Norway, so they're sending cars from China to Norway. Grok has it this way. Yeah, the X post from Neon 2583 tracks closely with the latest developments. It's a solid read on Tesla's Q4 2025 logistics shuffle amid regional policy headwinds and demand surges. No major red flags. It's piecing together real supply constraints, tariff dodges, and tax-driven rushes. Here's a quick breakdown. Norway, spot on. October sales tanked 50% year over year in Norway, part of a broader European EV registration plunge, but that's largely chalked up to depleted inventories waiting on fresh shipments, not weak demand. Live registration data shows a massive Q4 backlog from pre-tax change orders. One owner waited from late September to mid-November for their Juniper Model Y. Tesla staff complaints align with this. Esk Chatter confirms empty lots until early November arrivals kick deliveries into overdrive. More cars registered in 1 week than all prior Q4 days combined. Demand actually spiking 20 to 30% above normal due to the 2026 tax hike coming, I guess, in Norway. Shipments ramping up this quarter. Yep, vessels activity elevated. Early Q4 ports like Drammen and Trondheim saw unusual volumes of Model 3 and Y offloads from ships like the Seine Highway, signaling Tesla's pushing harder to restock Europe before year end. Inventory was razor thin post Q3, just 10 days worth versus rivals 100 plus. So this quarter's got the catch up vibe. Germany to Canada Model Y, new route. Nailed it. This is fresh. First Giga Berlin batch hit Halifax in early September. Hundreds of units, followed by a second in mid-October. It's a direct response to Canada's 100% tariff on Chinese EVs. Tesla's rerouting from Europe built to sidestep those tariffs. China, the Europe Model Y, also new escalating. This holds up as a newer play. While Giga Berlin handles most EU volume, Shanghai's ramped exports to spots like the UK Southampton since mid-2025 for Model Ys is filling gaps where Berlin is maxed out. China's October output dipped. Model Y is down 16% year to date. They're freeing capacity for exports amid soft domestic demand. Ties right into Norway's shortfall after Berlin's stock got diverted. So this seems to give you some kind of an explanation because it just didn't make sense. And that's what I try to do every day is see what's going on that maybe others are missing. And that was a big red flag to me. There would normally be bunches of discounts, and there weren't. Uber COO Andrew McDonald offered this morning that a measured take on autonomous cars in the Web Summit panel here this week. This is commercialization that's starting to happen right now, he said, after name-checking Uber's addition of Waymo robotaxis in Atlanta and Austin, as well as his recent launch of services with WeRide self-driving venues and vans in Abu Dhabi. The hardest problem to solve has been the technology component, McDonald told his onstage interviewer. That was Bloomberg's global automotive editor, Craig Trudell. However, while Uber has largely solved the engineering challenge of writing software that can drive 10 times as safe as a human, using that technology to make money off self-driving electric vehicles is an ongoing venture. To get there, McDonald said, Uber needs to not just supportive regulatory frameworks, a phrase he used more than once, but cheaper cars. The underlying hardware is still quite expensive. The economics don't work today. Now, recall in the argument I've been having with Gary Black now for 2 years that we keep saying, well, we don't know if the software will get there, but if Tesla can truly make a car for $16,000 and put it into its own fleet, that's going to be a lot less expensive per mile at cost than any of the other technologies where they're having to buy cars and buy tech from other people, put them out at much higher amounts on the highways because they're not making them themselves, and that the ramp potential for any of these companies is way smaller than Tesla's immediate availability. He suggested it will require a substantial drop in the price of robotaxi. It probably needs to go somewhere from a half to a quarter of what it is today. It's a half to a quarter. Uber is optimistic about that happening in China, with McDonald's citing the work of such Chinese firms as WeRide, Pony AI, and Baidu. The Chinese automotive sector has a proven track record of being able to iterate and get great tech, but also bring the costs of that tech way down in scale. He said, it's going to be a delicate transition. Uber's plans for autonomous vehicles don't involve any abrupt cutover from human to digital drivers, even though AVs can run almost nonstop. McDonald said that the average robotaxi in Austin is busier than 99% of drivers on our platform. Think about that. Their self-driving cars are busier than 99% of the drivers, which invites questions about the extreme 1% of drivers. From day one, autonomous vehicles generally aren't going to be able to handle every situation, every type of weather, every road, every speed, McDonald said. Waymo, for example, has taken a tentative route to offering highway rides on self-driving Jaguars, except, but Tesla will be able to handle anything that a cab can handle and probably a lot more. They're also not going to be fleeted to peak levels of demand because otherwise you'll just have a heavily underutilized asset. He predicted this would not result in human drivers being put out of work, instead suggesting that making ride-hailing service more widely available would boost overall demand. The reality is, quote, this is going to be a delicate transition from fully human labor to AI in the physical world in the form of autonomous vehicles, he said. Our network will help us sort or feather in those autonomous vehicles. What would happen to Uber drivers at the end of that transition did not come up in the discussion. Uber spent years trying to develop its own self-driving vehicles, but abandoned that effort after a test vehicle hit and killed a pedestrian. The company is now sticking to a partnership strategy. Over the last year, Uber has announced autonomous vehicle initiatives with such names as Volkswagen, EV maker Lucid, and as of last month, chip giant NVIDIA. We've announced 20 partnerships today, McDonald told Trudell. 18 months ago, that number would have been like 5 or 6. He called the NVIDIA partnership a really exciting one for us because it would both yield software that can be deployed across a variety of OEM partners and allow Uber to contribute a ton of ride-sharing specific data that's very rich for the problems that we're trying to solve to NVIDIA's AI models. So there you go. That's a mouthful, but man, there's a lot of content in there. Nick Cruz-Patain says that of Ron Barron on CNBC this morning, when you think about what he's doing, you talk about the pay package. And this is not like a Rockefeller or even like Carnegie or like Mellon or like Morgan, Ford, the great industrialists who built this nation. This guy is like Da Vinci and an artist. And he remembers everything. It's incredible. And the opportunities he's trying to take advantage of for his clients and for himself. So we say, why is he doing this? Why, when you're worth that much money, why do you do this? Think about it. Why is he doing it? Why is he working these crazy hours? Why is he risking his health? And to me, what is the difference between 400 billion net worth and $1 trillion net worth? What's the difference? It's not saving up for a beach house. And so the way I think about it is that he wants to think about how people will remember him someday, what he's created, how he's helped humanity survive. Yeah, and that's me too. Quite frankly, I keep saying I'm a little itty bitty tiny version because I care. It's not that I care really how people think of me 100 years from now, but I do want to make a contribution. Don't have to do this. Love doing it. Want to make a contribution. And speaking of contributions, have you bought the book yet? AI Rising now has 38 five-star reviews, one-star review, and the guy didn't read the book. Every single reviewer who read the book has given it 5 stars. I've never seen this before, ever. Ron Barron, Barron's Capital Chairman and CEO, appeared on CNBC's Squawk Box this morning, in addition to yesterday. He's framing the volatility as a classic buying window, staying steadfastly bullish on the long-term growth plans of Tesla and SpaceX. Here's a quick summary of his remarks from Grok. On the tech sell-off, Barron downplayed the drama, calling it a chance to hunt bargains in overreacted names. All stocks were down 3 to 5%. Now, not so much. He's already right. He revealed his barely trimmed positions. Not very much, he said, when asked about selling during the drawdown. Just looking and trying to understand where opportunities are and trying to take advantage of them. This aligns with his view that the 18% pullback from Tesla's 52-week high and broader Magnificent Seven weakness is noise, not a trend reversal. On Tesla's future, with 40% of his personal net worth in Tesla, 40% of his personal net worth in Tesla, Barron's all in. He told 30% of his funds holdings for clients, but zero personally, expected to quintuple his $8 billion gains over the next decade. He pledged to the board. I told the board, if you let me invest a certain amount of money, then I promise I won't sell any of my stock. I will be the last person out of the stock. Adding, we sold 30% for clients. I did not sell personally a single share, and I don't expect to sell in my lifetime Tesla or SpaceX. No direct Musk pay package talk today, but he did tie it to Tesla's AV robotics edge as undervalued. Then we've got from Dan Ives, who goes by Dives Tech on X. He says, we view this as a short-lived mini panic moment for tech stocks, as we believe tech stocks will have a major rally into the rest of the year as investors look to play the AI revolution and the second, third, fourth derivatives now playing out across consumer enterprise names. He is firmly bullish. Yes, according to Grok, Tom Lee has not changed his mind either. Has touched on the ongoing market volatility and sell-off, though his latest direct comment was yesterday, November 13, amid the sharp drop that day. He said that equities and crypto got clobbered, but he framed it as noise. Oh, he and Barron are together. In a broader bull thesis, emphasizing resilience in assets like Ethereum supercycle. Of course, he's a big fan of Ethereum right now, where dips are discounts to the future. No fresh posts today from Fundstrat as the extension of the downward trend kept on going, but his pre-drop outlook remains aggressively bullish. He's sticking to a year-end SAP target of 7,500, driven by a chase. Here's how he figures it's going to happen. A chase from underperforming fund managers rebalancing into Q4. These fund managers are behind the S&P right now, and that's not going to look good for their bonuses. So he's suggesting they're going to have to figure out a way, and it's going to be tech. There's nothing else out there. In a November 13th interview clip, he reiterated the market's major turn toward a year-end rally, dismissing short-term pain as overblown. Rumors today circulating on X about him slashing his S&P target to 6,800 appear unfounded. No confirmation from Fundstrat's site, his feeds, or media. Broader chatter ties his perma-bull stance to the dip as a contrarian buy signal. He actually hit it out of the park. He and his buddy, I forget his partner's name, they both said last week, expect volatility and a down and a dip in the markets, and then a reversal into the end of the month. Well, there are worries about the Fed not cutting. Those still seem to be top of mind and driving a lot of what's going on. Mary Daly, San Francisco Fed president, in a Bloomberg interview, she emphasized approaching the December decision with an open mind, but stressed the need for clear communication on the balance sheet. And noticed we still have a lot of work to do to bring down inflation to 2%. She highlighted the Fed's division over this path ahead amid stubbornly high inflation and labor market weakness. Meanwhile, Neil Kashkari, Minneapolis Fed president, remained on the fence regarding a December cut, pointing to recent data showing inflation not cooling as quickly as hoped and expressing caution about easing too soon. Well, the numbers he's looking at they're not government numbers, and he's obviously not looking at true inflation numbers. What he's looking at is the numbers that folks are putting out, that what they projected the PCE would have been, but they don't really know. So what numbers has he got that I don't have? Okay, here's what I have. I've got Truflation, and Truflation this morning is trending down again. We've got the overnight at 2.54. We've got goods still way up there at 2.84. We have core, though, dropping to 2.19. We got services now at 2.42. That's up a tiny bit. And the PCE at 2.59. Subtract 0.5 from all of that, just, and more than that for goods and not as much for core. I'm sorry, core or services. You would be down under 2.5 across the board and closer to 2. I just don't know what to tell you, but that's what I know. That's all I know. Now let's take a look at what the markets are doing, because who knows what might have happened. Oh, the markets are continuing up. Tesla is now down only 0.54 at 399.83. Very close to going to the green, and the trend looks that in terms of directionally. The Dow is now down only 0.85, which it was down a lot more. We've got the NASDAQ down 0.17. It was down way more. It was down like 1.5% earlier today, and way almost back to green. S&P down 0.33 at this point, also had been down over 1% earlier today. So everything is headed toward the green. That doesn't mean they'll get there. Doesn't mean we couldn't even have another test. Might have another downward bounce. We'll have to see how all that works out. But by the end of the month, according to Tom and others, and the end of the year, everything's going to be A-OK. Google, Amazon, all down. Apple's the only one Apple and Microsoft, and now NVIDIA, all up, actually in the green. The VIX is still at 2158. I'm beginning to think that maybe the VIX, somebody suggested yesterday, the VIX is only looking at the bonds and they're looking at the stock market. And those are the two things that they're making a decision right now to be at 21.6%. So we've got the Cathie Woods all down this morning, but all like this, just choppy, choppy, choppy. No real directionality in the Cathie Woods. We got the bonds this morning back up. Whoops, wait a minute. Let me do that again. Yes, up 0.8 of a basis point to 412. We've got the oil market up $1.35. It's like, what's going on here? But that was up more earlier. We're back to almost $60 even. Natural gas down 5% to $441. That's extremely good news. Gold dropping $117. That's 2.79%. Back down to 4,077. Randy might still be right. We'll see if we get to 3,400 before we get to 4,400. Silver down 4.5% to $50.77. And Ron Barron thinks that Tesla stock will be $2,500 by the end of the decade. That was just a headline that was flashing by. Copper down 1% this morning, almost back to $5. Surprising, maybe not surprisingly. It was around 470, 460, even 450 before that mine had problems. Okay, we've got the dollar is actually up this morning, even though the headline is talking about weekly losses. Hard to say how that might turn out, but at least today, right now, this minute, all the ones I'm looking at are positive for the dollar. Bitcoin had touched at 95,000, as I mentioned earlier, now back up a little at 96,511, but still very much at the bottom of its recent numbers. Ethereum, however, on the other side is actually up this morning, 0.58 at 31.92, but nowhere near what it has been just a couple of weeks ago. All right, pre-market. I'm sorry, we don't need any pre-market information. Never mind all that. Yeah, so what have I got for you? I have got Bradford Ferguson last night. We had a fantastic time. If you didn't watch that show, I will put the card up. And then Cern Basher, I got to put that card up too. So eat both of those. You can imagine very, very good last night because of the news and everything. And Cern Basher's was very news driven, which is all still true today. Everything he said last night is still impacting today. So if you haven't watched Cern, you haven't watched Bradford Ferguson last night, you got to go back and see Bradford's hat. Yeah, got to see his hat. That's right. Okay. And then later on today, I'm trying to get Nicholas Gibbs on today because Larry is going to be gone. He's over at the Barron's conference. And so I'm trying to get Nicholas Gibbs to stand in. So we'll see if that happens. And then tonight, I'm not 100% sure. I've got a Phil Beisel potentially, and then Larry Goldberg's going to be on tomorrow. We're going to do the Kathy Wood a week late, but it won't matter. The numbers will still matter, and they'll still be very, very cogent. So that'll be tomorrow. All kinds of cool stuff happening. Let me leave you with one thought. $2.99. If you only read one chapter, Cern's chapter, or my chapter, or Bradford Ferguson chapter, just read one chapter, you'll get your $2.99's worth. Buy the book. Just do me a favor, buy the book. If you hate it, send me a note. I'll send you the $2.99. Really. If you buy the Kindle version and you hate it and you think it's not worth $2.99, I will give you back. Venmo, not Venmo, what do you call it? PayPal, whatever. It's so easy to send money now. I'll send you the $2.99. If you hate it, let me know. It's been great talking to you.